In other news then, the United States Federal Reserve has restarted its easing cycle after being on the sidelines since December last year. But the question is, will it make a difference? In this next report, we dive deep into what investors will watch out for in this week.
Fingers will be on the buzzers as investors eye another jackpot week in financial markets. Still, the real question now is which economic indicators are pointless? Perhaps the best answer might be rate cuts. Take Sweden and Canada. Both economies slashed rates in 2024. Both have a high proportion of floating rate mortgage debt. And sure enough, homeowners have felt the benefits of rate cuts much more rapidly than elsewhere. So both Canada and Sweden should be outperforming this year, right? Wrong. Both led the league tables of consensus growth forecasts at the start of 2025. Yet in reality, unemployment has risen, and both central banks were reluctantly forced to restart rate cuts this month. Obviously, there's the small matter of tariffs. Who knows? That might just explain more of Canada's woes than interest rates. Still, the Fed finally embarks on what is expected to be a series of cuts. It's worth questioning how useful will they be. If Sweden hasn't succeeded in stimulating its economy with rate cuts, what change does the US have where the 30 years mortgage rate are typical? Investors are certainly keeping a keen eye on America's housing market. House prices have fallen in each of the past 4 months. Expectations are this week's numbers will make it 5. Admittedly, the latest data also reveals a highly unusual and frankly eyebrow-raising 20% rise in new home sales last month. But the number of properties sitting on the market is still historically high. Downward price pressure looks more likely than not. Home builder sentiment is also ultra low. Further cracks in the housing market are a potential issue for the consumer story. Rate cuts are not a quick remedy to all of that. But equally, a better run of data last week have raised the questions of whether the Fed needs to cut rates at all. At face value, the jobs numbers in the spotlight this week might back the question doing the rounds on Fed cuts. However, the broader U.S. jobs market still looks ominous. Not least because consumers themselves are noticing that hiring conditions are deteriorating. So market bets are driven by a stronger case for follow-up Fed cut rates in October and December. With tariffs, rate cuts are expected to hit the economy more slowly than they used. That only adds to the case for the urgency for Fed rate cuts. Business Bureau, WION World is One.